Good morning, everyone. Thank you very much for joining us today for our webinar on crypto assets in the real world. Yes, I'll just give it a couple of seconds for a few more people to join. And during that time, we can go through some of the housekeeping for this webinar. Firstly, I'd like to introduce myself. I am the moderator for today. My name is Livania Naiker, and I am a customer success manager. I manage a team of customer success managers in the Benelux region. I've been with Refinitiv for over 6 years now, and I'm very happy to presenting this webinar to you today. Firstly, in terms of the system that you're on 24, you can see that at the bottom you have access to some platform features with the widgets. You can also submit questions via the Q&A chat box, and we will answer these as many as we can, time depending, at the end of the webinar. Please fill out the pop-up survey at the end to provide us with feedback, because we value your feedback and we would love to make these webinars as good as possible for our viewers. And you can use the toolbar at the bottom of the webinar screen to access resources such as the speaker biographies and webinar materials. And just some technical points to note: if the slides are stuck, please refresh your browser and click the media player on your screen to enable the sound, ensuring flash is enabled in the browser. There is no dial-in, so please use your device sound to listen to the webinar. So basically, it's coming from your PC or into your earphones. All right, so for today, we have our speakers. Gijs Froling is a customer success manager within my team based in the Netherlands, and I will hand over to him to introduce himself. Thank you.
Hello, everyone. My name is Gijs Froling. I joined LSEG as a customer success manager of the trading department, and I'm based in Amsterdam. And I will cover the workspace environment and show you all the capabilities we have regarding digital assets. And from here, I will hand over to Antonia. Thank you.
Good morning, everyone. My name is Antonia Eilander, and I have been a corporate and tax lawyer for 15 years. In the last 2 years, I specialize in crypto assets.
Hello from me as well, everyone. My name is Vlad Dramoliev, and I'm a crypto assets and blockchain expert. I've been in the crypto space since 2013. I founded several startups in the space, and the local community in Sofia, Bulgaria. I've been authoring many different pieces dedicated to DeFi, crypto, blockchain, Bitcoin in particular throughout the years. And I have helped literally thousands of people to actually understand crypto assets and what's happening with them in the world. Thank you.
Thank you. Thank you, Gijs, Antonia, and Vlad for the introductions. So today we will have our speakers, Antonia and Vlad, talking about what does the crypto assets landscape look like, how is decentralized finance absorbing real world assets, some of the legal and tax implications, and then later we'll hand over to Gijs to show you how Refinitiv can help you stay up to date with the crypto market. So without further ado, I'm going to hand over to Antonia and Vlad for their presentation. Thank you.
Thanks, Stefania, and thank you for the first slide. So let's jump right in. Let me give you a short introduction about the crypto asset space. So as you can see from the charts, the current market cap of the entire crypto asset space is about 1 trillion, and it's about 66% down from 3 trillion year over year, like since the since the last 365 days. What is interesting to note here is that although we are down significantly, the market cap of the space was about 200 billion in 2020. So we are currently, even at these lower levels, almost 5x from where we were in 2020. So the current state of the market is what we call it, like in the industry, refer to it as the crypto winter. And the primary pressures causing that winter or this slow period are the Fed rate hikes, so the increase in the interest rates from the Federal Reserve, also other central banks around the world, but primarily the U.S. Fed, and the actions of the Fed are caused by following closely what's happening with the consumer price index in the States, so basically inflation. And currently, with what we are witnessing is that the crypto asset space, crypto assets specifically, are very much correlated with risk assets, specifically the S&P 500 and the NASDAQ. Next slide, please. So briefly on the main types of assets, because Antonia will focus on that more thoroughly in the next slide. There are generally 4 types. We have cryptocurrencies, and these are currencies that are used for paying for fees on public blockchain networks like Bitcoin, Ethereum. Then we have crypto tokens, which are crypto assets that are managed by smart contracts. And the examples here are like Uniswap, Aave, and Compound, if you've heard of them. The next significant type of asset in the space is stablecoins. And these are basically tokenized fiat currencies, primarily the US dollar. And then we have non-fungible tokens, which are NFTs that can represent digital or physical assets. And in brackets and under stablecoins, you can see the classifications according to the markets in crypto assets, regulation in the European Union that was that actually was accepted, approved, and will go into force in the next months. And I'm giving the word to Antonia.
Thanks so much. Yeah, MiCA will be applicable in Q3 next year for stablecoins, and after that for the rest. So I have been to all of the major conferences physically in Europe and online in like Africa, America. And I have heard all of the large exchanges and all of the large crypto businesses complain about the same thing, and that's classification and categorization of crypto assets. And it sounds boring, but that's what you do when you have issues with the tax authorities or other similar issues, because when there is no international legislation about crypto, which is the case especially for tax, then you don't have symmetrical classification. And you have asymmetrical classification, and then not only you can have double non-taxation, which is an issue for the tax authorities because they lose on tax, but you can have double taxation, which is a big issue for the businesses themselves. So what we see is a dynamic classification, because also what we see now, which is very special for the crypto assets, is that they are usually 3 categories, which are payment token, security token, and utility token, and that's the commercial classification. So like payment tokens are Bitcoin, Ethereum, because you can use them as money. Security tokens are the ones like shares. And then utility tokens are like vouchers that you can only use on your own environment inside. It's like air miles for flying and things like that. But what's happening with crypto assets, which is very special for that asset group, is that you have hybrid tokens, and those are stable coins. And hybrid tokens have both security and a payment token categorization. But additionally to that, what's super tricky is that coders, in their effort to make the assets cool, better, like better than the competition, modern, or everything, they, by accident, because they're not lawyers, they don't realize that they changed the classification of the crypto asset. And then they put the company sometimes in danger because you can get retrospective even fines because you're going out of the original classification that you were taxed upon. So usually, because there's no international legislation at the moment, lawyers or tax authorities do everything case by case. They use the Hinman test, Howey test. They usually take the old legislation. They see, is there guidance issued in my country? No. Then I use the old legislation and I apply it in a technology neutral manner to the crypto asset. And then I do compare and contrast. You compare it to the old kind of assets, and then you contrast it to the old assets. So what I also wanted to say is that when you dig deeper, you have issues with valuation, but I will talk about this later. And then I will hand back, I think, to Vlad. Next slide, please. Ah, no, sorry, it's me. So this is a just visual representation of what I said just now. And I think now the next slide is Vlad. No, I already said that. Thank you so much. I talk too fast. I have to. Yes.
Apologies. I believe Vlad is on mute.
Sorry, I have a physical button on my microphone. Cool, let's dig into the decentralized finance a little bit. In the decentralized finance space, we have a measure called total value locked, which represents the total value of assets deposited into smart contracts in applications from the decentralized space. And currently we have 52 billion of value locked in DeFi applications. And again, to make a comparison, at the beginning of 2020, that value was at 600 million. So here we have a really, really well-pronounced growth of almost 90x of total value locked increase. Although, again, we are quite below from where we were 1 year ago. And DeFi is really the fastest growing sub-industry in the crypto asset space. And what is DeFi? I've included a quote here that it's an ecosystem of financial products based on smart contracts, which are programs, and blockchain technology to enable open peer-to-peer, very importantly, transparent financial services and automate payment, clearing, and settlement. As I mentioned, it's really one of the spaces that is most interesting to Wall Street, and we have a lot of traditional experts, CEOs coming into the space to explore what it can bring them. Next slides. Yeah, thank you. So what are the primary services? These are also called DeFi primitives. These are the services that any DeFi ecosystem needs to have in order to function properly. So we have decentralized exchanges, also called autonomous market makers. We have lending and borrowing services. So we have a money market, developing money markets. We have stable coins, which I already mentioned, which are tokens that are pegged to real world assets, like specifically dollars. and we have derivatives exchanges. Next slide, please. And now tokenization. So what's happening on that front? Why is tokenization a trend in the crypto space? So there are several reasons. I have extracted some of the most important ones here. We have increased liquidity that is achieved by tokenizing real-world assets, especially when these real-world assets can be tokenized and then used as collateral for loans in, for example, stablecoins or other crypto assets. Then we have greater transparency of transactions. Everything on the blockchain is very easily auditable. We have better accessibility. DeFi, the crypto space, never sleeps. It's open 24/7, 365 days per week. Sometimes this is good, sometimes it's bad. We have faster processing and settlement. Usually, when it comes to the most popular smart contract platforms, we have settlement in less than, well, we have clearing in less than, let's say, 10 seconds, and settlement usually comes in 10 or 15 minutes. So what is actually tokenization? Maybe I should have started with that. It's basically the process of transforming ownership and rights of particular real-world asset into a digital form and into a digital, like, tokenized form. So these assets begin their lives on usually public blockchains, but there are also other types of more private blockchains where these assets can reside. And what is being tokenized? I already mentioned the stablecoins are a big part of the crypto space. And having in mind the total market cap, the current total market cap of the entire crypto space, stablecoins represent about 15% of that. So it's really fiat currencies are big, like the biggest asset or the most important asset that is being tokenized currently, and this will continue to happen in the future. And then we have commodities, and we see that they are only about like 1 billion, and I'm referring specifically to gold here. So we have tokens that represent or are pegged to gold. And after that, we have all of these different assets that different companies are experimenting in tokenizing. And I guess the third biggest part would be real estate. We see a lot of companies around the world trying to tokenize real estate so that more people can actually own small pieces of real estate, which otherwise they won't be able to own. Next slide, please. So what are the challenges? Of course, the main challenges when it comes to tokenization is regulation. And we have different countries, different jurisdictions providing clarity, legal clarity on tokenization in different ways. And this leads to problems because once you tokenize an asset, it basically goes into the digital space, which is global, but then it refers to assets or needs to follow regulations that are very local in a specific jurisdiction. And this, of course, leads to unclear enforceability, and there are also KYC and AML issues. But according to JP Morgan, they are very much focused on stocks, on different financial instruments that they are seeking to tokenize. They believe that also, for example, treasuries or money market funds can be tokenized, and then they can be brought into DeFi in order to be traded, borrowed, and lent there at like institutional scale. And actually in 2022, we see the first signs of this happening. Next slide, please. And yes, finally, one example of a project that is in the DeFi space, and that's tokenizing real-world assets. That is ThinLake or Centrifuge. And what they're doing is they're helping companies, for example, like companies from the real estate space to tokenize part of their assets to get loans in stablecoins. So they're into tokenizing commercial real estate, revenue-based financing, the real estate bridging loans, and all kinds of different assets. But still, they're about like all the assets that have managed to tokenize until now, and they're regulated in Germany, by the way, are about 32 million. But yeah, we see more and more companies like that appear in the DeFi space. And next slide. And as you might have noticed, if you have tried to stay up to date in the crypto space, information is really, really fast-paced. We have so many things happening, not only on the tokenization asset space. We have NFTs, we have stablecoins, we have regulations this year. Yeah, we have DeFi. These are all universes. And as I mentioned, TradFi, which is traditional finance, is meeting decentralized finance in 2022. And really, in order to be ahead of the curve, you need a very interesting, like a tool that can summarize all of the information for you. And yeah, we have found that Refinitiv Acon's tool is quite good at that. But yes, the next speakers will be talking about that in more detail. So I'm giving the word to Antonia. Thank you.
Thank you, Vlad. So in general, when we talk about taxation of crypto assets, we have to first identify the taxpayers. You have individual taxpayers or business taxpayers. And then, unfortunately, for the individual taxpayers, they cannot deduct their losses usually, which they make in crypto. For businesses, I would like to advise them to optimize their losses every year, because that's actually a very good thing. In a negative, I think it's called crypto winter, that you can utilize your losses. And I keep repeating like a parrot, because people get upset when they get taxed with 35%. You have short-term and long-term capital gains. And then when you hold the crypto asset for less than a year, you're going to be taxed with a higher percentage. And so keep that in mind when you're selling your crypto assets. Next slide, please. So in our first course, I explained this in very big detail. So there are 13 types of taxes applicable to crypto assets. And if you see them here, they're arranged in possibility order. So income tax is the one that's the most likely to happen to you, and the least is stamp duty tax. I don't have time, unfortunately, to explain how those taxes apply, but generally speaking, keep in mind about income tax, capital gains tax, and then sometimes there's VAT, but very rarely. Gambling tax is a very tricky one, because it's not part of tax treaties. So if a tax authority decides that you as a miner are engaging in kind of a gambling activity, maybe you will be able to mine, maybe not, maybe you will be successful in your mining. They might tax you with gambling tax, and then if you're somehow a resident of another state, they can also tax you there as well, so you have double taxation. Next slide, please. So as I said, I don't have time to explain all of the taxes in detail, but the most important to remember is that usually countries classify crypto assets as property, and property taxes apply. And then what's super important is the moments of taxation. What is a taxable event? The taxable events I explained in my second course with Vlad, but again, I don't have time to go through all of them. But the most important to remember is that when you convert your crypto into fiat, that's always a taxable event. So you will get taxed in almost all countries, like 95% of the countries. When you are doing exchange, crypto to crypto, to my surprise, some countries don't tax that. But Bulgaria, for example, because they have a lot of crypto people, they are really experienced, they will tax that. payments for goods or services or wages. Those are considered payment in kind, and you are taxed. So what's tricky here is that when your employer is paying you in crypto, they have to convert some part of it into fiat and pay the tax like that to tax authorities, because only Mendoza, Argentina accepts taxes paid in crypto. Everyone else says, okay, you're getting paid in crypto for your salary, but we want fiat. We don't want crypto. I hope they will change their mind. I think they will, but that will happen slowly. Receipt of a new token for mining, that's also almost always taxable. Next slide, please. When we look at international legislation, as I mentioned about taxation, at the moment there is no international taxation. OECD CARF is coming, I think 2025, but that's mostly reporting between tax authorities about information. It's not going to say, okay, this crypto asset is going to be taxed like that, and you have uniform taxation everywhere. It's not going to happen like that. We usually, unfortunately, see when we were creating, and we're still creating our anti-money laundering course, that in general you have 11 money laundering techniques with fiat, and all of them are successfully used with crypto at the moment. But what's important to remember is that fiat currency money laundering is 18 trillion euros, and with crypto it's only 9 billion euros. Vlad in general speaks about self-regulation at other events. We don't have time to discuss that. I'm really impressed by the crypto industry because they automate everything from the beginning, including taxes. So they're saving a lot of time, they're saving a lot of money. You have FATCA and CRS, which the clients of London Stock Exchange and Refinitiv, I think, know really well. That one is applicable for crypto assets as we speak. We have the TFR. We have MiCA. As I mentioned, it's coming next year, Q3. OECD CARF, I think, will come 2025. The money laundering package of the European Union is coming. Exchange of information will happen. And here, I always say exchange of information is nice. A lot of information will be collected with MiCA and with OECD CARF. But tax authorities are already processing a lot of information for DAX 6, for example. And then even if you have the information and you don't understand it, what's the point in that? So it's really important that tax authorities and other authorities get to speed with crypto assets and learn everything about them. DeFi, to my disappointment, is not regulated at the moment, because even the European Commission the other day said in a conference in Brussels that DeFi is a really big challenge to regulate, not only for the European Union, for everybody. So they're conducting studies. You can even send them email how you think DeFi should be regulated. I thought MiFID II is going to be applicable to crypto assets because the banking industry was forcing that because they were saying that MiCA is too weak. But specialists from DeFi, from the European Commission, said that unfortunately or fortunately, MiFID II is not applicable to crypto assets. And DeFi is tricky because true DeFi is very decentralized. You have the spectrum of decentralization. In the end of the spectrum is what is really truly decentralized. That's DAOs, decentralized autonomous organization. And on the other spectrum of decentralization, you have traditional finance. So technically speaking, when something is truly decentralized and is truly a DeFi, then it's really difficult to regulate it, and it's also super difficult to tax it. When we think about risk, usually you have market risk, operational risk, integrity risk. With DeFi, you have hidden risk. But what for me is really important is that when you do the Hinman test, the Howey test, you have to think about three things about DeFi. Is the governance truly decentralized? Is the ecosystem truly decentralized? Is the community truly decentralized? So for me, just to add something, I find it really cool with DeFi is that usually something before that was done by 3,000 employees in a stock exchange now is done by no one, by Uniswap, for example. So that's for me something really impressive and disruptive about the DeFi industry. Can I have a next slide, please? So as I mentioned, classification is a challenge, but also valuation. Here, you have a lot of issues because you have to keep track of your crypto assets, about price, volume, time that were acquired, they were sold. And then here, usually, if you're a tax lawyer and you have to prepare a valuation report for the tax authorities, first of all, a lot of them don't know that some information is public. But even if it's public, the information that you will have in one large exchange will differ than the other because of the difference in volume that they're trading. The costs are different, and the price of the asset is also a little bit different. Then when they service your account, they deduct different costs. So for me, that's a complete nightmare because you have a lot of different data, and in your valuation report, you have to have a benchmark that's a reliable source. So what you also do for transfer pricing purposes is that you get data from like a Refinitiv. And I'm super happy to see that they have data also on crypto, because then you go to one source and then in one dashboard, you see all of the information you need. And you can establish a benchmark that's on average what the crypto asset was costing. That's on average what the costs for other things are. And then basically tax authorities accept data like this because it's an objective data, it's not subjective data. Next slide, please. So yeah, thank you so much for listening to us. I forgot to introduce actually our company. Basically, we do trainings in taxation and regulation of crypto assets, and then the ultimate guide of taxation and regulation of crypto assets is made for people that don't know anything about crypto or don't know anything about tax or legislation about it. So when you watch all of them, you start from beginners, you know nothing, and then you transform in the end to knowing everything. And yeah, I just wanted to thank Vlad, and I'm really excited to see the presentations of the other speakers. Thank you.
Thank you very much, Antonia and Vlad, for a very interesting presentation on crypto. It was quite interesting to learn the complexities of the taxation as well. I'll now hand over to Gijs Vroling to take us through our presentation on our Refinitiv solution called Workspace, which is our next generation icon platform. Thank you very much. Gijs, take it away.
Yeah, thank you. Do you see this at the moment?
Yes.
Perfect. Well, if I'm interested, for instance, in like a quick overview of the crypto market itself, just can type in FXG, and that will bring us to the homepage of the foreign exchanges. Just on the home button, type in the crypto. What you will see here is a quick overview of all the different capabilities we have, such as cryptocurrency spot trades. Those are the favorites. I entered it here. And if I'm interested, for instance, in a different exchange, we have here also all the different exchanges we have in Workspace and the contributors. For instance, as an investor, I'm interested in all the different digital asset pairs we have. Just clicking on this one, it will pop up and it will show you all the different crypto pairs we have. And those include cross asset pairs, but also like the spot ones, such as ETH BTC or ETH USDT. Going back. And let's say I'm interested in more detail in the Bitcoin coin. This will show you like a quick overview of all the detailed information of Bitcoin only. What you see here is all the different Bitcoin spot prices of the different providers we have here. Just type in the Gemini, for instance, and it will change automatically in the chart on the side. But we have also like calculated crosses of the different currencies, such as GBP, Euro, Danish Krone, or the Canadian dollar. Another interesting feature we have is like the Bitcoin futures itself, such as the Bitcoin expired at December. Just clicking on this one, and this will give you also like a detailed overview of all the capabilities we have of the Bitcoin future itself, which will expire here on the 30th of December in 2022. A related chart as well, the forward curve, and the seasonality chart. And in addition to that, we've also like different providers, data providers. And those data providers are, for instance, Crypto Compare, FTSE Russell, Digital Assets Index Series. And this will show you like an index of the Crypto Compare. And this will give you like a quick overview of all the different pairs that are available on Workspace of Crypto Compare as data provider. You can pop it up, and it will be shown in the monitor itself, and you can use this for charting, for instance. In addition to that, we've created our own layout specialized for the digital asset market. What you see here, for instance, is like a comparison of Bitcoin of Ethereum against Bitcoin. But you can also, what you see here, for instance, over the 2-year window, the increase of or like Bitcoin compared to Ethereum compared to Bitcoin is an increase of 150% higher return compared to Bitcoin. You can also like extrapolate your own chart and do some predictions with technical analysis. Let's say you want to know when is the best time to invest in crypto. Just can have a look. What you see here is I enter Bitcoin, choose all the available years, and it will be shown here automatically. What you can see here, for instance, is like in the September month, it's basically generally a red month. And if we are looking at July, it's a good month, as well as in April. But we can also change it, for instance, to Ethereum. That's also quite interesting. And this will show you all the results of Ethereum as well. And let's say we are interested in all the central bank events when they raise, like, for instance, the target rate. Just type this in. We will add it. And it will be shown automatically. And in addition to that, we've also like the news data. So if I'm, for instance, interested in this event of the Fed itself, just clicking on this one, and this will show you like all the relevant news items on that day when the central bank has a new interest rate. Oh, I apologize. Oh, sorry. Yeah. And let's say, for instance, we are interested in all the related news of the crypto market itself, the digital assets. You can just type in here in the search bar the decentralized finance, where I did previously, and it will be shown automatically here below. And you can also adjust it to only important, most read, or important and recent, and it will be shown here as well. You can also use like an operator, such as AND or OR, and use like the operator combined with the digital asset market, as well as the corporate market regulations. And you will just type in the regulations here in the search bar, and it will show this. This one will be shown as like the top result. And you will see all the different regulators we have, regulation news, as well as the Reuters news, and only, for instance, Bitcoin and the regulations. But what if I'm interested in the correlations of my own assets, like a portfolio I created here, which is based here, and I named it here Crypto Monitor. Just type in here in the correlation. Just type in Crypto Monitor. You will add it. It will automatically be calculated as well, and it will show you like the results of the portfolio you created. For instance, here, what you see here is like all the different correlations we have related to the monitor I created. So as a trader, it's quite important to diversify your portfolio as well. So what you see here, for instance, quick summary as well. You can also choose like different methods of the calculation of the correlation. The top distribution, which is AVAX and link. And there's correlation, the highest correlation at the moment of 84%. But we can also do like a rolling correlation with Bitcoin and FTSE Russell. What we see here, for instance, this is the correlation just in a window of 1 year. But we can also adjust it here to, for instance, 2018 in January. Calculate again. For instance, this is the Amsterdam Stock Exchange. And what you see here is like an increase of the correlation between Bitcoin and the Amsterdam Stock Exchange. And also, in addition to that, an interesting feature we have is like MarketSpsych. Some of you probably already know this. MarketSpsych is basically sentiment analysis based from which is calculated from the natural language processing engine and the machine learning engine. And they are offering agriculture, countries, as well as commodities, ESG parts or companies, where right now are focusing on the cryptocurrency market. And basically what they do is analyzing the social media events as well as the news media. What you see here is like the frequency of a coin which is mentioned in the news or in the media itself. Famous example in this case is Celsius, and they felt like they paused all their withdrawals and transfers and swaps between customer accounts. What you can see here, for instance, if we change all the different time frames to the same window, you see here in 2022 on the 12th of June, they paused all the withdrawals. And this is like the frequency. And what you can see here, in the 13th of July, they filed a Chapter 11 bankruptcy. It's basically declaring their own company bankrupt and starting to reorganize, to have like a reorganization of the company itself. But sentiment decreased as well, as you can see here, because the customer confidence also decreased, but it's shown here as well. But we have also like the chart itself, so you can get like a detailed sentiment analysis on the specific coin itself. You can choose it here with all different kinds of variables you can choose from. So this is a fork forecast, the gloom, the hodl, innovation related to news as well. And if you're interested in this, we can give you also like a technical demo in person or online. Please let us know via the email or chat, and we will arrange a meeting for you. From here, I will hand over to Lefania. Thank you.
Thank you very much, Gijs. I'm glad to see that our solution has so much information on cryptocurrency and the ability to analyze the space. So now we will move on to some questions. And I think one of the questions from our audience is the trends in the DeFi space. So I'll turn over to Vlad. Vlad, what do you see happening in terms of decentralized finance and the trends taking place going forward?
Yeah, sure. As I mentioned, 2022 is a really, really uneventful year for DeFi. And what we are witnessing is that after the collapse of, for example, Celsius, which was caused by the collapse of a supposedly DeFi project called Terra, people are becoming more cautious about what assets they invest in or they hold or they buy for a long time. Apart from that, we are also usually like the DeFi space, the crypto space, it moves in cycles. So as I mentioned, we're currently in what we call a crypto winter. So it's like it's basically a downturn, which is caused by macroeconomic and really DeFi specific, crypto specific factors. And one of those is definitely the unsustainable economic models on which most of the DeFi projects were based on. And I'm referring here to a concept in the DeFi space called yield farming or liquidity mining. So what this refers to is the fact that users can actually, when they deposit liquidity into a DeFi protocol, liquidity in the form of crypto assets, they get some exorbitant returns for doing that. So we're talking about 20%, 30%, 100%, in some cases 1,000% of annual percentage yields per year. And obviously these economic models were unsustainable. And that's definitely one of the internal factors, like the value of the tokens which were given out for free in large amounts simply plummeted. And we have more than 13,000 tokens stopped being traded in 2022. And what this leads to is actually more space to grow for the rest of the DeFi projects that have been built by professionals, by people who have experience in traditional finance, that understand also how smart contracts work, and understand like basically credit market, money market fundamentals. And these projects now have the opportunity to really shine. So this is definitely one trend, like basically the demise of a large portion of really coins that were unsustainable, that didn't have any substance in a way, and then the rise of these more professional projects, if I could call them, built by people with strong experience in traditional finance. And now we are seeing concepts like, for example, the LIBOR, the London Interbank Offered Rate, being redone in DeFi, and basically becoming the rate which an entire ecosystem of derivatives, for example, interest rate swaps, can be developed, and so risk can be managed better. And so this is the next trend. We're looking at users who are enjoying the higher returns coming from their assets in the DeFi space, that deposited in the DeFi space, in comparison to traditional alternatives. But at the same time, they are very risk averse, and they're trying to manage risk in a way that they basically are not exposed too much. So they're not looking for the big returns. They're looking for the steady but secure returns. And finally, the final threat is regulation. And regulation has two sides. One side is that, of course, some of these projects will have to go through KYC or introduce KYC requirements and other safeguards. But at the same time, it opens the gates to the average user. So it basically, regulation is commercializing the DeFi space. And in combination with the other factors, I believe that the DeFi space is really, really prepared or going in the direction of even more rapid growth in the next years than we have seen previously. So yeah, that's my note here.
Thanks. Thank you, Vlad. We have a couple more questions for you. First one, how do you see gas fees impacting the seamless clearing functioning?
This is a great question. So yeah, the technology is also evolving, and we have layer 2 solutions being introduced. We have a lot of total value locked being transferred or generated in solutions like Optimism on Ethereum. We have Ethereum actually going through upgrades itself. So we just had a couple of, I believe a month ago, we had Ethereum moving from one consensus mechanism to a different consensus mechanism, which is about 99% more energy efficient. And then in the next phases of upgrades on Ethereum, we will also get some the execution of transactions in parallel, and that will greatly help with gas fees. But of course, it's important to keep the base layer secure as possible, and that will always be expensive. But then all of these real-time transactions, let's call them, or like rates of hundreds or tens of hundreds of thousands even transactions per second will happen on other layers. So the technology is definitely improving. It's growing with the space. So I expect that we'll be able to reach the speeds of centralized services quite soon. Of course, yeah, it's a trial and error. So we see a lot of all this experimentation is leading to bugs. And those could definitely sometimes be quite costly, but this is how open innovation happens. There is no way around this. But again, I think the professionals who are coming, like especially security professionals coming from the traditional space and introducing practices which are very security focused and like risk averse, I believe, those teams will be able to push the space forward quite quickly and improve the technology significantly.
Great, thank you. Thanks, Vlad. I believe this next question will probably go to Antonia. Using Centrifuge as an example, how does this product fall into MiCA or other upcoming regulations?
No.
Hi.
Maybe I
can
can
hear you.
Yes.
Yeah, it's for Vlad.
Okay. Yeah. So when it comes to Centrifuge, everything is completely regulated. The team at Centrifuge, actually, they have worked with German authorities, with the German regulators, in order to create a tokenization regime that they can follow, and then potentially not go to jail. but all of these companies are completely and fully KYC'd, and they have to go through a rigorous process of like analysis. They have to provide prospectus, and it's really business as usual. And from there, Centrifuge are actually they are collaborating with one of the largest projects in the DeFi space called Maker, and they are behind the one of the more decentralized. I wouldn't call them completely decentralized, but like more decentralized stablecoins in the space. So what's happening is basically a company goes to Centrifuge, they provide all of the information that is required in order to be listed as a company on the platform. Then their assets, the assets that they want to use as collateral, are being, what is the word? Basically, how much they cost, like what is their actually the value. So they're being valued, and that value is being used as collateral to mint or to create stable coins using the Maker system. But the process is very, very highly regulated, and I expect that any real-world asset that goes online will have to go through a process like that. There is literally no way around that.
Great, thank you. I think we have time for one more. Do you think that NFT will also be an important player for finance and DeFi?
Okay, should I take this one?
I can just say my take and then you can add to it.
Of course.
So for me, at all of the international conferences that I go, people say, 99% of the cryptocurrencies are going to die. There's 17,000 at the moment. 95% of the NFTs are going to die. And that might be true, but you have really big players like Nike, even McDonald's, I think, that go into NFT. And people should, because they always tell me, NFT is that like digital stupid picture. I said, no, NFT, you can do so many things with it. You can really follow what happened to your car. I have an NFT on that, like how much repair did it have, how many accidents did it have. There are even special organizations that make technology where you take a picture with your phone and immediately that bag is a fake Louis Vuitton. So instead of, as a customs controller, you have to go through the bag and whatever, and waste time, slow people down, you just take a picture and the tool says, this is a real Louis Vuitton, the passenger can go. Apparently, a lot of people make fake watches, fake, even licenses, certificates for the watches. And then you have the 30, 50,000 watches being fake. With NFT technology, this is a real, expensive Swiss watch. So that's what I wanted to say. And for me, I'm really excited about NFTs. And we're actually doing a webinar on them on 15th of November, which is free, just to educate the public.
Yeah, just like a quick question on my side. I think that, throughout the years, I have heard that like crypto assets will disappear. And not only they haven't disappeared, but they have really, really developed. And I think the same is happening with NFTs. NFTs, in their essence, are basically standards. Standards of tokens, like token standards on a blockchain. And as standards, they can represent basically everything from the real or the digital world. So they're basically limitless applications for what NFTs could be used for. And of course, this cleansing that we are going through during the crypto winter will annihilate most of them. But this is actually good, because the crypto space is really like what we're witnessing throughout the years in the crypto space. It's just evolution on steroids. and NFTs will also have to go through that. And then the diamonds, the actual like real world usage or uses of NFTs will become more apparent, and yeah, projects will become more serious about what they are doing, how they're doing, like how they're presenting themselves. The marketing will die down a little bit, and then we'll see where is the real value, like how are NFTs really helping an average person or a company achieve something. So it could be supply chain, related to supply chain, could be related to some kind of like enabling artists around the world to actually present their stuff, and actually people, buyers of NFT art, to be certain that what they're buying is actually related to, is actually created by a specific artist. So I think there are numerous use cases. So yeah, definitely not dying, definitely.
Thanks. Sorry to cut you off there, Vlad, but we have run out of time. Thank you. That was really interesting. I'm so glad we got to talk about to answer some of your questions. Just like to thank everyone for attending, and I hope you found this really valuable. Please don't forget to fill in the questionnaire after this webinar, and have a wonderful day further. Thank you.